you've got to be super current on these single family home trends. So remember, so much of the news that we're consuming and the facts and the figures is all of housing blended together. But 99% of us on this call are very focused on a local product. Not only are we focused on single family, which is different than all kinds of other products, but we're also focused on a specific market, right? The product we offer, we need to do a better job of understanding the local trends, the product trends than our market does. So I want to share with you guys some counterintuitive information that I've been studying, that I believe in, that I've poked some holes in, and we're going to share this with you. So Melissa's going to drop in some information for you guys in the chat to steal this, to watch it, to see the sources. I'm going to stay super high level. I'm going to paint a picture of what I'm seeing, but I want to give you guys the sources of this data so that you can come to trust it and formulate your own story and modify it based on your local market, which is what this is all about. This is what I know to be true for single family residents. So everybody talks about, are we in a bubble? Is this like 2008 again? You know, like, are 2007 again? Are all these offers that are going on? People are offering $40,000 above the market. But does that mean it looks like the last time that we had the same kind of fury and fever and people were overpaying? So if you look at the 50-year average, going over the last 50 years, and you adjust for population, how many houses were built in America, right, to keep up with population growth? We have never returned from that crazy time, that crazy bubble that we hit. So you see the 4 years that are in red, we overbuilt like crazy. There was more supply than demand. So we are underbuilt for the last 13 years. And you know what happened in 2021 when something called COVID hit? And all of a sudden they literally shut down construction sites and nobody knew what to do. So we were under for 13 years. We were super under last year. And so now we have all these trends I'm about to show you, which is showing that demand is growing for single family and there's no product available, which is why it's so hard, which is why your investors are calling you and saying, I would love to buy more properties. And you're like, there are no properties to buy and the prices are crazy. This is one of the biggest drivers. So takeaway from this, we are 13 straight years below the 50-year average. And last year, we got crazy below because literally things were shut down for months. And so people are scrambling to try to keep up with that. But I think we can all see it's going to be a long time. So if you compare this year to the housing bubble and you're like, wow, we're like half of what we were. But look, even before that, look back to the year 2000. We're still building less homes today and last year and the year before and the year before that than we even were when most of us were in high school or middle school or elementary school, depending on how old you were. So there's definitely been a long trend in the making. So on top of that, we also had this thing called Millennials, which everybody loves to talk about, the Millennials and the change, huge generation, right? The biggest generational push since the baby boomers, and they're all coming of age. So basically in the next 10 years, we are going to have more 30 somethings, 30 to 39 than we've ever had in America in our lifetime. And I think the same numbers apply to Canada, because I know some people on here are in the Canadian market. So look at this chart. Here we are today, right? And we're moving from an older generation to a younger generation. And that is going to be advanced significantly over the next basically decade and a half. So what happens when people turn 30? It's been pretty proven that in general over the years, when people are in their 30s, they're looking to grow their family, they're advancing, they're starting to move into the best income earning years of their life. And people tend to look around and look for single family homes. Now, on top of that, most of these people have survived the financial crisis. They've been crushed by student debt. We had the financial crisis. We had a number of other things. Most of these people have spent the last 10 to 15 years living in these giant megaplex communities. And that served them for a certain season of their life. It was great because there was a gym and a pool and they could meet people. But now these people are starting to settle down. They're able to work from home. Now they need a home office in addition to just a quick bedroom and a kitchen. They're starting to have kids. there's more and more demand for single family housing. And there's an insane amount of pent up demand based on what we've seen in the last couple decades. So when you think about the under trend of housing and you think about the coming wave of people coming of age of wanting single family home, it's pretty fascinating. Let me show you one more thing. I don't know about you guys, but some people got mailbox money last year. I don't know if you've heard that term, but that's what they call the stimulus packages, the unemployment, right? When COVID hit, there was, I don't want to get political, but it just was not, there's no way that the US government was going to let people, suffer from this. And so as much as there was true suffering, there was things happening, there was a major initiative to try to offset that. And so I don't know if you guys know this. This is your next fun fact at your dinner party. 21% of all US dollars in circulation right now, all the money in the market, 21%, over one fifth of all money that we're using today was literally printed last year. And I know they don't print money like they used to, right? But still, they basically just update a zero in a database in some computer software program and it like floods out to the banks. But 21% of all money in the system literally just arrived, poof, like that. So why are we shocked that housing prices are $40,000 over value, Riley, right? Because there's all this money that's in the system. And a lot of that money is going to wealthy people who are already investing in single family. There's more people, there's more companies raising money with the mandate to invest in single family homes. So we're seeing a lot of our sales going from individuals to companies. There's more foreign nationals who are wealthy that are trying to bring their money into the country than ever before. I live here in South Florida, and it's not unusual for them to build a high rise, like 200 unit high rise. And I'm like, who's going to live there? That's crazy. They're like 900 square feet. And then the next day I get an ad and it's like, well, we sold out phase one. So we're starting phase two tomorrow. And it was explained to me that if you have a lot of money and you live in Russia or Colombia or China or a company where you have concerns about the value of your money, they know that there is no investment in the world that is safer than US real estate. We have so many laws on the books. Over half of our laws are all about protecting personal property and US real estate. And so there is a flood of people from outside of the country, not only trying to live in the US, but people who are not even moving here are just saying, well, I could invest in the stock market, I could do this, the government can take it. But if I own single family residential property in the US, it is an extremely safe investment. And I have a lot of clients on the West Coast in California, here in Florida, and they've learned that and they're going out and they're marketing. I ran a panel in Atlanta last week. We were talking about the investments coming from China and Australia and just people trying to buy in the US market, all creating like a land grab for the single family residential property. So these trends are all coming together. And so you might think, well, you know what? The housing prices are outrageous. They're just ridiculous. When you start thinking about 21% of this cash, this giant blue bar that I'm showing you right now on the screen coming together, it really starts to make you rethink what a deal is or what expensive is. So let's look at earning potential, right? Let's look at like what we all make at the end of the day and how much of that goes to housing. So up until around 2000, basically around 21% of Americans' income went to housing. It got crazy in 2006, like we talked about, right? Like people were just buying everything. The houses were going crazy. It only got up 25%. I was actually really shocked to see this. It was only like about a 5% increase from 20 to 25 when it seemed like it was crazy. Well, earlier in the year, and again, pricing has continued to go up. And so I definitely say this with a little bit of a caveat, but basically around 15% of our median income is going to housing today. And so when we say housing is expensive, we're forgetting that there's more money in the system, that salaries have risen faster than ever, that people are making more money than they ever have before, that there's more money coming into the system than ever before. And so it's easy to say, well, this house used to sell for $250, now it sells for $350, therefore it's expensive. But when you start comparing that to other things, things change. And this is really my argument to you guys, is staying current on this stuff is extremely important. So people say to you, hey, I want to sell. So Mark, you said, getting rid of the old properties, buying some new properties. I love that idea. But when people start to tell you that they're going to sell their property because they want to cash out, I'd like to ask those people, where are they going to put that money, right? Where is that money going to go? Do they believe that they're super smart and they're cashing out at the peak of the market and housing prices are going to drop and they're going to take that one property sale and buy three? Well, I just showed you three trends that shows you that's probably not going to happen. So they might say to you, well, you know what, Jeremy, I want to cash out. I just want to put that money in the market. It's a little safer. Well, I'd like to show you that not only is housing more affordable in terms of like the average median income, as I was just saying. So basically like in 2000, it took you about 4 years of the median income level to buy a house. Right now it's almost 5. So yes, it's gone up a little tiny bit. Still nothing like it was in 2015, which is after the financial crisis, right? When housing values started to grow, but income wasn't keeping up. So basically, essentially, you had no food, you had no taxes, you had nothing else. If you just spent all of the median income, you could pay off your house in about 5 years right now. But this is where it gets really interesting. So if you had a portfolio in the market in 2000, you would have to sell almost 1,900 shares of the S&P 500. I don't know how much you guys know about investing, but that's just an easy, it's basically the 500, companies that Standard & Poor's picks. It says this is where people should be putting their money. It's a diverse, it's better than the Dow Jones, in my opinion. It really is a good representative of the stock market. So you have to sell 1,800 plus shares of the S&P to buy a single family home at the rates then. Today, you have to sell less than half of that. So if you're selling your US single family home property to invest in the market, you're actually buying something more expensive. You're actually selling an underpriced asset in terms of income, and you're buying a more expensive asset. So again, Melissa's dropping this stuff in. I want you guys to know this. It'll take a little time for you to internalize this, but this is super important because I know a lot of people, a lot of BDMs have told me, well, people are just selling and they're going to put their money into the market. Well, it's your job to remind them that they may be buying an overpriced asset while selling an underpriced asset. And I think anybody knows that that's a bad idea. So maybe you're a little more conservative and you say, okay, well, I don't really want to invest in the market, but I want to buy some gold because gold's safe. And there's inflation right now. And so we should always buy gold, which is like, the gold standard. Well, again, it took you 610 ounces of gold to buy the median single family home in 2000. It takes you 1/3 of that today. So housing is not appreciated at the same price as gold. And maybe you're super modern and adept, and you're like, well, no, I'm putting all my money in Bitcoin, right? Well, again, Bitcoin is inflated even higher. First of all, I can't tell you how many Bitcoin it took in 2000 to buy a house because it didn't exist. But in 2010, it would take you almost 750,000 Bitcoin to buy a single family home. It takes you less than 8 Bitcoin to buy the median price of real estate today. So again, if you're looking at single family property as a value store, right? And you're like, oh, let's just get out of this chaos and let's just go safe and go in gold or Bitcoin. All of a sudden, single family residential is looking like a deal. So let me know what you guys think about this in the comments, but I think this is really important because I think the fallacy is everybody's simply comparing it to the US dollar price of last year and the year before. And we're making a very shallow assumption that property prices are out of control. But if you look at the trends I just shared with you, you look at the dollars that I just shared, like the value store prices, it starts to make you rethink where you're going. I know there's other migratory trends I'm not even going to talk about. You guys have heard me talk about these before. A lot of people are moving from, high income states to low income states like Florida. People are moving from cold climates to warm climates. People are moving from, very volatile economies to more stable economies. I know I'm never selling my Florida real estate probably ever again in the next 10 years, at least, because I just only see it appreciating at a more rapid pace than the US dollar. And so because I can't think of a reason to convert these assets into dollars that I would make more money from, it changes the way that I value the property. And so that's really the takeaway. I think a lot of us know this quote from Wayne Gretzky. It serves us well. It can be used in a lot of contexts, but you always want to skate to where the puck is going, not where it's been. And I know that history does tend to repeat itself. The problem is history repeats itself with 100 shades of gray, different versions. So we never know exactly how it's going to repeat itself. And so I'm formulating the story in my mind that history is repeating itself, that real estate's always going to be a great deal. What I'm seeing that people may be getting in trouble is that they think they're timing the market and they're selling property like it's 2007, and that we have all of this amazing insight. We're selling at the height and it's all going to drop, or we're just going to rebuy it. So I'm a big believer that if our clients are leaving the residential real estate property management today, meaning they're cashing out, they're probably never going to get back in, because prices are going to continue to climb and they're not going to have an access point that's accessible to them. And so that's really the takeaway I want you guys to know.